Good evening, everyone. I hope you're doing well. In my previous video tonight, I talked about the correlation between the price of oil and inflation rates, both in Australia and globally. And we're seeing the oil price spike at the moment, and there is a strong correlation between oil prices and inflation. So we should expect, if this oil move holds, that inflation rates are going to spike higher. So let's have a look at some of the charts now. And if you've been following my videos for a little while, I've been talking about the price of oil, how underpriced it is. You can see a month ago I talked about oil being the most underpriced major commodity. 4 months ago when oil was near the lows, I talked about was the breakout failing. I'd been calling for a breakout, and I showed that the breakout was still on. 8 months ago, and then 6 months ago I showed double bottoming patterns in the price of oil, and we could see since the low in December, on the 17th of December, just before Christmas, oil this morning was up 36% from that price level. It's still up 30%. That red candle is the price cooling off a little bit, probably some profit taking in the markets. But we're looking at a daily candle chart here, and again, I've shown these before in my videos. This was the high from June last year. Now I like to try and draw the lines where it captures the most price action. So, the first level you could say, well, that was the breakout there. You had the three highs there, the breakout, and then the finding of support at the previous key lows. We might be able to just zoom back a little bit there to show those spike lows. You can see that level there, very key. Another place you might want to draw it is you could say that red candle was ridiculous, and that if we draw it across there, we can capture a lot more of the downtrend that oil was in for the second half of 2025. You can see the breakout there, and then it just finds a bit of support at the previous little highs there, and up it goes. But of course, there's no denying at this point that it's in a breakout. The question is, is it going to continue to run, or is this just the market sort of, panicking given what's happening with the military action in Iran? If we go to a 5-year chart, I'm just going to clean the face here a little bit. We've talked about this many times before. The price of oil spiked to $130, but the sort of double top high was around 120. This is when Russia went into Ukraine. We could see, a double top there, negative divergence on the momentum indicators. So that was a sell level at the previous high, negative divergence, of course, the price trending down. Now, if we were to take, I would start from the spike high and take, let's draw it a little bit more conservatively. Let's take the double top high, and you could say that the first, again, just because a downtrend breaks doesn't mean an uptrend has started. But I would say this was the downtrend ending. You can see that it broke out there. It's bounced. That line was very key. Previous lows here from many years ago. Let's clean the face again. And even if we say, okay, well, this action for 2022, that was Russia going into Ukraine. That was an abnormal event. Well, not that abnormal these days, but an extreme event, let's call it that. So we could say this was the downtrend, lots of touches there, a false breakout in June. We looked at that on a shorter term chart. If you draw the line across there, I mean, even if you draw it there and capture the spike highs each time on the way down, we can see now this is a weekly candle, so this candle won't close until the end of the week. It's only Monday. The market could easily dip back down to 60. So I just want to be clear, this is not yet a long-term breakout, because this candle isn't completed yet. The week's not over. But you can clearly see, just down here too, there's some positive divergence on the momentum indicators. I talked about this in my previous video. This was, now, here's where you've got to decide, was the price of oil signaling that these kind of conflicts were on the way? Because, let's be honest, the people that have the billions of dollars, that have enough money to move the price of oil, either in part they're smart enough to forecast these things. They read the news well enough to know that this is where we're trending. If you want to say it's insider trading to some extent, I don't have any knowledge about that, but I would certainly be sympathetic to that argument. But you can see the price of oil is, I mean, I don't know if we'll see this level again. I don't want to say with certainty, but it seems like, I remember at the time, I can't recall the exact date that they went into Venezuela, but at the time the price of oil fell below $60, because the thesis was, well, they've gone into Venezuela, they've got access to all the US oil companies are going to come in and they're going to drill, baby drill. Trump likes to do his little dance and drill, baby drill. And I remember at the time a few clients saying they didn't want to buy oil because all this new supply was going to be there. And I said, no, you remember, you got to, if it's in the press, it's in the price. Once it's in the news, it's already priced in. And that was a pretty strong buy signal. So quite a wild move today. It's up about 7%. This in evening trading in Australia, but it's very early in the morning in the United States. So we are seeing a bit of strength in the US dollar. That's not necessarily negative for the price of oil. In fact, if we look at let's go back to the oil chart. If we have a look at the oil chart and we do a comparison with the DXY, the US dollar index, we'll just do the same scale. Let's go 5 years and let me just clean that chart up a little bit. You can see the US dollar, the white line. You would think stronger dollar would make oil price go down because oil's priced in US dollar. Not necessarily the case. If we smooth this chart out a little bit, now it's not a perfect correlation, obviously, but you can see as the US dollar goes up, so too does the price of oil, and as the US dollar goes down, so too does the price of oil. So a stronger US dollar doesn't necessarily mean that the price of oil is going to go down, and we may see, if this conflict escalates, a rush to the US dollar. I know that doesn't make sense to a lot of, it doesn't make sense to me either, but that's just the reality of how these markets work. And of course, if we were to look at the Brent price, sorry, let me just clean those that indicator. It's going to be a similar story. So there's probably no need to look at the same chart again, but you can see again, it's been in this 3-4 year downtrend. Maybe you could say that's a messy falling wedge. It's probably in a I mean, again, it's early to say because the weekly candle has not closed, but it's threatening to. I mean, clearly the downtrend is ending. We're in a attempted breakout, and just be wary. Check out my my other video, very short, just a YouTube short, just showing the correlation between inflation and oil prices. And I've said it in many other videos that aren't related to. Let me just come back to closing that chart. I've said this in many other videos that aren't about the price of oil. Governments have been suppressing interest rates for decades. The inflation problem was never solved. They didn't raise it. They should never have cut interest rates during the pandemic. They should never have. But they didn't raise interest rates enough in response in 2022, and they should never have started cutting interest rates. We've got a massive global inflation problem, and this is the last thing that central banks need. This is going to be a disaster for the Reserve Bank of Australia. If this oil price, and I'm not forecasting the price at the moment, it's probably, for me and my clients, we already bought oil investments towards lows. So we've been reducing those slightly, taking a little bit of profit, not necessarily adding to them. Right now, I don't know where the price of oil is going to go, other than to say in the short term, very short term, maybe it's a little bit expensive. Medium to long term, it's been a very we've seen gold and silver pump high. We've seen stock markets hit record highs. Oil is still, after all this time, and let me just go back to crude, from the $130 spike high in March 2022 when Russia went into Ukraine. Even after the 30% move up today, oil is still down 45% from that high. It's a major commodity. It's probably one of the most underpriced major assets on the planet, key economic assets on the planet, very underpriced. So I would say medium to longer term, we should probably expect, especially with all this conflict that's going on, that's probably not going to resolve as quickly as President Trump would like you to believe. We should probably expect that there's going to be upward pressure on the price of oil, and therefore further upward pressure on global inflation. The inflation problem is not solved. Thank you for listening. Have a good evening. Cheers.